Welcome to Trading Nation. I'm Sara Eisen. There's a bit of a cold brew war happening behind shares of Dunkin' brands and Starbucks. Check out the coffee giant's performance over the last 2 years. While Dunkin' is up over 50%, Starbucks is down 12% in the same time. Much of Starbucks' decline has come this year. So which is the smarter caffeine play? Matt Maley is with Miller Tabak. Gina Sanchez is with Chantico Global. Matt, from a chart perspective, which one would you chase, Dunkin' or Starbucks?
Right now, again, as you mentioned, on a strictly technical basis, I would want to be in Starbucks. You mentioned that Dunkin' Donuts is up over 50% in the last 2 years, and it's up 25% just since April. So it's had this huge move, and it's getting overbought on both a short-term and an intermediate-term basis. You look at its weekly RSI chart, it's back up to a level where it was of overbought condition, where it was back in January, just before the stock corrected 14%. So it looks like its upside here, at least on a technical basis, is somewhat limited. Starbucks, on the other hand, it's been stuck in a sideways range since 2015, and it's between like $52 and $63, 63 and a half. It dropped below that range last month when all that negative news came out, and it's trying to bounce back up and get within that range. So if it can rally back above 52, that should give it a lot of momentum to shoot it back up into the middle of the range. So at least on a near to intermediate term basis, Starbucks, if it can break above 52, is going to be the better play.
Better play and perhaps bigger laggard in the last few years. Gina, what about you? Starbucks or Dunkin' brands? There are actually concerns about both of them with regard to leadership changes at the top.
Yeah, you're absolutely right. And I think the bigger challenge that Starbucks has had is that this is a fundamental problem. Starbucks is now, although it is newer than Dunkin' Donuts, 20 years after Dunkin' Donuts, Starbucks emerged, but they emerged really, really big. And they're actually starting to look like a very, very mature company. And I think the last 2 years has really been a sign of just far too much market penetration. And now you're talking about having to close a series of unproductive stores, et cetera. So I think that's the biggest challenge. That and, of course, the departure of their CFO, as you mentioned. So I think the fundamentals here still don't add up in the Starbucks play. The bigger play you're going to make with Starbucks is because you think that from a geo play that their China bets are going to start to pay off, but that's still only a small segment, right? Dunkin' Donuts, on the other hand, continues to be the lower cost play. They have huge margins built into their entire business model. They're franchised, they're not owner operated, and they end up with like a 30% margin relative to 16% for Dunkin' Donuts, and they're still focusing on that sort of good price for a cup of joe. And I think as the economy starts to slow, I actually think that from a fundamental perspective, that's going to continue to be the place where you want to be aiming your marketing dollars, is really in that sort of more affordable space. So I think Dunkin', even though it has run a long way, fundamentally still has the wind at its back.
Good debate, guys. Thank you. Over coffee, Matt and Gina. And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time. Hey traders, did you like that video? There's more where that came from. Scroll down and click on the links to the right of your screen. We publish new videos and commentaries from our experts every day. And don't forget to follow us on Twitter at Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.